Good afternoon once again, everyone. So we'll just start in a minute. So welcome to the first episode of the webinar series for altGraaf. altGraaf is a digital platform for alternative fixed income investments. We'll talk a little bit more. So I'd like to open this webinar with a question for everybody. And there is a Q&A section on the webinar where you can post your answers. So my question to everybody attending this webinar is that what comes to your mind when we talk about fixed income investments? So you can post your answers in the Q&A section. And in the meantime, I would like to introduce my co-panelist for the day, Jaiprakash. He's the Chief Growth Officer of AI Growth. Jaiprakash, if you can introduce yourself.
Hi, good morning, everyone. So my name is Jaiprakash, JP. I manage growth efforts at AI Growth. AI Growth as a platform provides technology services and all supporting services, and we manage one of the distribution platforms we manage is altGraaf. So I myself have been more than 18 years of experience in the financial services space across US, Canada, and India markets. Worked predominantly in institutions from HSBC to asset management world and then BFCs. So here I manage everything with respect to customer engagement and distribution marketing. So that's a quick intro about myself. Back to you, Sonu.
Thank you, JP. Thank you for taking the time out today for this webinar. So a little bit about myself. I have around 8 years of experience in banking and fintech startups. So I've been part of a few early stage startups where I've been part of their 0 to 1 journey. And I've also contributed towards fixed income investments for retail investors and doing it through technology. So that's about me. So back to the question that I earlier asked, what comes to your mind when we talk about fixed income investments? Interestingly and expectedly, the answers that we got is FDs, mutual fund debt instruments. So these are commonly the instruments that comes to somebody's mind when we talk about fixed income investments. Is there more to it? Yes, there is more. That's where altGraaf comes into play. So traditionally, fixed income investments have been in the market. There is FDs, debt funds, etc. that comes to mind. But what are the challenges? What are the challenges that are there in the current fixed income landscape? The current fixed income products, they offer annual yields less than 10%. So there is definitely a need where currently there is low interest rates. Then there is an inflation risk that people take when they invest in such products because that can erode the purchasing power of the returns from the current fixed income products. If the interest rates offered by these products, they don't outpace the inflation, investors might experience a decrease in the real returns. Also, these other products that we're talking about were earlier accessible only to the ultra HNIs, and they used to get a privileged access. There's a lot of cumbersome documentation that is there, and it's difficult to kind of manage. So why altGraaf? So altGraaf is the first distribution horizontal platform for fixed income. So what altGraaf does is that altGraaf brings exclusive opportunities, curates them, and simplifies all the complex terminologies and gives access to retail investors for participating in these kind of instruments, which would go beyond equities, fixed deposits, real estate, and gold. So, JP, if you'd like to add something on what altGraaf is trying to solve.
Yeah, see, broadly, I think we talked about, right? So when people think about investments, they always have the aspect of, okay, I'm going to have some money in FDs, which is a fantastic product, fixed deposits, they have it there. And then think about, okay, let me also buy some real estate, which is hard real estate I'm talking about. Okay, I buy a land or a house. And then they say, okay, let me actually go buy physical gold and keep it in the locker. So that's another aspect of fixed income. And then they think about, okay, investments. Then they go, okay, let me play in the stock market. Let me do SIP or mutual funds. All of them are great products in broadly. But I think what altGraaf is trying to do is in the fixed income space, for example, leave out the equities which are volatile with the market or mutual funds which again are volatile long-term kind of products. If I have to think about some fixed products which are defined, not linked to any market volatility, and can give me returns which are predictable and from a standpoint of repayments coming back to the customers, apart from FD, is there anything I can diversify? So I think the key word is diversify is instead of putting everything on fixed deposit, there is an opportunity where a part of your entire investment portfolio, you can put it in these kind of products. And which we'll talk about the type of products that we're talking about. And each of these products obviously carries risk, but typically these fixed income products carry a risk much less than equity side of it. So you can diversify where the yields on this would be much higher than a typical FD product that we have. So I think, again, I want to really stress the word is about the diversification factor to put a part of it in these additional fixed income products, which are typically less risky than equities and can give you a predictable return. So when you look at the overall investment portfolio, these products would be a great addition to your overall investment portfolio. So that's what we're trying to solve, of bringing these kind of opportunities to the customers.
Right. So adding to what JP just said, when we talk about these traditional fixed income products, there's also liquidity concerns because a lot of them come with higher tenures and lock-in periods. So all that taken into account is what we're trying to solve here at altGraaf. altGraaf, also one important point is that it is part of our holding company AI Growth Private Limited, which is led by seasoned professionals. They each have 10 to 15 years of experience in banking and financial services. And we are also backed by leading global VC funds, which we'll cover in the upcoming slides. So we talked about the traditional fixed income products and why there is a need to diversify one's portfolio to look into these products. So we'll move further. Right. So what are we offering? So one of the important factors are that these are non-market linked opportunities. As JP mentioned, stocks are a really good investment avenue. But what about the volatility? I mean, markets are sometimes at its all-time high, but then there is also a dip in the market. And that's when investors get stressed and they feel the need that, if they are in need of some cash, they have to liquidate their stocks at a loss. So these shortcomings are then overcome by fixed income products with a stable income where you have a stable cash flow and you can actually go ahead and plan your investments or any horizon or anything that you're planning for. So these stable cash flows can help you achieve that. These are also carry higher yields than the traditional debt products, and these are curated investment choices. Now, one of the most difficult part of fixed income products is that discovery, right? So people find it difficult to find these opportunities. So what altGraaf does is it does the heavy lifting. It brings opportunities and it curates them. It simplifies, and then it just doesn't stop there. Once an opportunity is listed on the altGraaf platform, it continues to monitor those opportunities and provide regular updates on the same. So all this plus, nonetheless, the most important part is the robust credit risk assessment process. So we will talk about this at length in our upcoming slides, where when people ask, why should I invest in this opportunity? So what are the steps that have been taken to understand whether this can be listed on the platform? So it goes through a credit risk assessment process. So right. So why should you choose altGraaf, right? So now we'll talk about what are the fixed income opportunity products that are available to an investor on the altGraaf platform. So we have unlisted corporate debt or corporate bonds. We have invoice discounting. We have real estate debt. We have asset leasing and venture debt. So these are again originated, structured, and provided with risk-assessed opportunities that are available on the altGraaf platform. And the returns would be ranging anywhere between 8 to 20%, depending on a lot of factors. And of course, we talked about our highly qualified, experienced team that brings these opportunities. So one of the interesting things is that we have a lot of borrowers that approach us. They want to raise funds through our platform, but it goes through a very stringent credit assessment process, and less than 10% of the borrowers are actually listed on the platform. So we'll talk about that as well. Right. So what do investors gain? They get an easy and exclusive access to curated investment opportunities. Now, why we are stressing onto this factor is that earlier this was accessible only to ultra HNIs. Now, we've seen an era where stocks became popular. Before stocks went popular, people might have had their doubts on whether they want to invest in stocks or not. But today, where we stand, stocks are easily accessible, and everybody wants to understand. They want to share their knowledge. So that's where we are with stocks, and that was the same thing for mutual funds. So mutual funds were also not popular, but then again there was a decade where mutual funds got really popular, and people started talking about it. And we can find in most of the portfolios, people on an average, they invest through SIPs, etc. So why not fixed income? I mean, as a new participant in fixed income, your question would be that why do people not talk about fixed income that much? Because it has been difficult to kind of discover these products, because it has been a very private market. Now, I was just reading an article where it said that corporations who like to raise debt from the market, they like to do it in a private manner because it's easy. They don't want to go into the public issues, because it takes a lot of time, effort, and money to do that. So corporations prefer a very private way of raising funds, which then happens that only institutional investors or ultra HNIs, they get to participate in these investments. So that's what we are trying to solve, and that's why we say that we're bringing these to access to retail investors. And then what the next important point is that access the details for making a transparent investment choice. Now, unlike public limited companies, private companies, you might not find a lot of details about them. So Giraffe does the heavy lifting for you. They bring all the details for a particular borrower to you, simplify them for you so that it's easier to understand, and then make an informed choice about your investment. Transparency, I mean, not only at the time of investments, altGraaf also takes the responsibility to continue to monitor these investments for you. And also, of course, details on the risks associated with the investment. It's not just any investment would carry some risks. There is no such thing as a risk-free investment. So the details on the risks associated with the investment, altGraaf is absolutely transparent about it, and they list it down for you. We also have a riskometer on the platform, where you'll be able to see where the risk stands for a particular investment. We have a wide variety of choices in terms of yields and tenure. See, we're not trying to bring to you one sort of opportunity, because everybody have different types of goals, short term or long term, and their preferences based on their profession or what their upcoming goals are. So based on that, we bring a choice to you. So anytime if you log into our platform, altgraaf.com, you'll find that there are yields ranging between 8-10% up to 15-16%, and the tenures could be anywhere between 30 days to say 2 to 3 years. And that's one unified platform to bring you all of this. So moving on. So who are we backed by? because as an investor, as a person who's wanting to try out our platform, you would ask us that why should you trust us? So we're backed by some big names like Axel Partners and Harmony Partners, and also individuals like Siddharth Shah, the co-founder of PharmEasy, Dharmil Sheth, co-founder of PharmEasy, Ramakant Sharma, who's the co-founder of LiveSpace. So these are some of the big names who we've been backed by. So now coming into the products, we would like to not deep dive a lot, but we'll try to cover as much as possible. So these are the four products, 4 to 5 products that we have on the platform. We have commercial papers, we have unlisted corporate bonds, we have invoice discounting, we have asset-backed leasing, and we have venture debt. So when we talk about unlisted commercial papers, now this instrument was actually brought in 1990s, and this was a way in which companies would raise a short-term debt. So this would actually help companies to raise short-term debt because corporate bonds are actually 12 months in plus. So any debt that a corporation raises between 7 days to 364 days comes under a commercial paper. So this instrument itself is unsecured. So by definition, this is an unsecured instrument. However, an important point to note here is that for a commercial paper to be listed by a company, it has to be rated. So it has to mandatorily get a rating of either A1, A2, or A3, A1 being the highest. So it has to get a minimum of A3 rating by any of the credible credit rating agencies in India. And that's how they can list commercial papers. These would have, so on our platform, we've had the minimum tenure for a commercial paper that we've done in the past was a minimum of 3 months, but it could be as minimum as 7 days as well. Maybe we'll do that in the future. And the yield could be anywhere between 7 to 12%. Even though this is unsecured, but as I mentioned, these are companies who mandatorily require a rating to be taken, and the rating also has to be up to date. If the rating is due for review, then they cannot list a commercial paper. So this has been an excellent instrument for people who probably have a short-term goal and they need the funds after some point of time within a year. So this is an excellent opportunity to invest in. And then comes unlisted corporate bonds. So what are corporate bonds? So companies who require debt, they don't want to liquidate a share in the company. They raise a debt, and that is how it's done through corporate bonds. So corporate bonds, and these that are listed on our platform are secured. Now, these are secured against some identified assets. It could be tangible, it could be intangible, it could be receivables, it could be some sort of an asset that the company has placed as a collateral, but these are secured. The tenure could range anywhere between 12 to 36 months, and the yield could be anywhere between 8 to 18%. So an interesting thing about bonds were that earlier bonds used to be issued in the form of a bond certificate, and as time passed and there were some reforms that were brought in, now bonds are mandatorily to be in the form of a demat form. I'm sure everybody is aware about demat account. So every bond that you purchase goes into your demat account. So that's about corporate bonds. If JP could take us through invoice discounting and the other products.
Yeah, sure. Invoice discounting, in simpler terms, if I have to explain it, is somebody providing goods to another company. For example, I'm supplying milk to another company, and the company is supposed to pay me, but the company is saying I'll pay JP in 30 days. So, but 30 days is going to be some time for me because I need the funds now because I'm managing my working capital. Working capital is nothing but you're selling goods, you're waiting for the money to come from the person that bought the goods. And then, but in the meantime, I also need to manufacture, which is the inventory, right? So the time between me giving something to somebody and waiting for the money to come from that somebody to me, it's a challenge for the company. So companies, what they do would be is look for investors who can fund those invoices during that short point in time. And for that particular benefit, they will provide a return to the investors. And that's how invoice discounting came. It's a supply chain working capital management investment. So the underlying security is an unsecured product, but we try to reduce the risk in the form of undated checks or personal guarantees. By the end of the day, the product is an unsecured product. The tenure of these products typically are from 30 to 90 days. And the returns, which is the annualized yields calculator, which is annualized yields. So it will be multiplied or probably updated for the tenure, and it will be about 10 to 14%. And it's a great form of financing for all the people who are managing the working capital day in, day out. So I think there's a variety of type of sectors we cover in invoice discounting, whether it is from an e-commerce standpoint, or it's manufacturing, or it's from a standpoint of goods, agri. So there's a lot of players in different sectors that we kind of promote, obviously after due diligence. The leasing is way, if I have to simply put the leasing is companies think about for capex, they think about how do we raise capital in the form of debt for capital expenditures. I think easiest way is I can try to give one of the examples that we have on the platform right now is simply the fact is a company, for example, is wants to buy cars for as part of capital, and they want to generate revenue for after buying the cars. So I'm buying a cars of say 1,000 cars I'm buying, and I need money for buying the cars. And after buying the cars, I'm going to make them run and generate revenue. For example, Uber, Ola, you can think about it. So a lot of times what happens is they try to get, and it could be for anything, for manufacturing, tractor, you can think of any form. So the entire asset, that is the money they are raising from the investors, is towards purchasing those assets. After that, they'll use those assets to generate revenue. And the money that is coming from that assets are given to the investors in the form of payments. And that payments could be in a little bit of principal and interest. And typically they are like 15 to 36 months because it will take time for the capex to kind of burn. So that's a very great part for people who are trying to raise money for capex. Obviously, it's secured against assets, cars, tractors, machines, machinery. So this is a form of investing, or it has been a product for a long time. As I said, I think Sonal was mentioning, this is a product that we are trying to bring into the market, but this has been there for a long, long time. Venture debt in the startup ecosystem, you are very well aware. A lot of companies, a lot of startups are there. They are raising money for equity purposes from a lot of venture capitalists. But all the startup companies are also would be borrowing in the form of debt from banks, NBFCs, our companies tied to it. So it is similarly, it's a structure-wise, it's a non-convertible debenture. Just the structure of the instrument itself will come into demat account. But if these are companies which are in the growth stage, because that means they are actually building to grow, they kind of, we call it venture because they are not have a significant number of years of experience operating and generating cash flow. So they are in the growth stage and raising money from equity, but also borrowing some money from debt side. So the yields are a little bit higher side. You see the yields are coming 15, 20, it will be in the higher side of it. The tenure will be much shorter because obviously because of the nature of the company, 12 to 15 months. Again, as I said, these are typically secured against some sort of underlying collateral. So
Thank you. Thank you, JP. So in a nutshell, what we're trying to do here is that it's not only for investors like you that we bring these different type of products. It's also a benefit for the corporations who based on their business model can choose one of these instruments based on where they are at a growth stage. You know, maybe they are a startup at this stage. You know, they're a cash burning company who would like to raise a venture debt. They would not like to, you know, liquidate their ownership in the company. Or if it's a company who wants to do financing for its capital expenditure requirements for asset leasing, or if it's into supply chain and, you know, they want to tap on the unpaid invoices, wants to go through invoice discounting, or if it's a company which, you know, wants you know, to go into the corporate bond mechanism to raise funds, or it could be a short-term commercial paper. So not only for corporation, for investors also, if you see the variety of tenures, what we want to do eventually is that, we want to build a portfolio for your alternate fixed income requirements, where, you have all these type of products diversified into your portfolio, and based on your goals, you can choose the tenure and the yield based on your risk appetite. So moving on. Right. So we talked about our robust credit risk assessment process. So JP is one of the members of our internal credit committee. So he will take you step by step how a borrower is listed on the platform.
Sure. So broadly, I think one of the things that we put a lot of attention is related to how do we source the different type of borrowers who want to borrow money, and eventually then investors participate on it. So we have a credit committee with that we internally follow, and I'll just talk a little bit about it. So the credit committee is typically investment committee, I'll probably call it, as a kind of participated by all the senior leaders. So from the founders, risk, investments, myself, strategy. Broadly, we all folks, we participate in it. So any particular opportunity that comes to us, either we talk or any opportunity come to us, we start off with initial conversations with the customers, with the borrower in this case, and talk about how the business is, initial aspect of what information, how long the company has been, what the management is, what kind of numbers they have. So it will be going through a preliminary evaluation process. Maybe basically doing the preliminary evaluation is all about knowing what the company is, how long the company is, what the business model is, who are the management, what kind of numbers they have been done. They've been funded by equity investors. So it will be high level information that has been provided by the borrower to us, which then is going to be analyzed, and then it will be presented to the investment committee to talk about whether this opportunity, the company is doing well, whether this opportunity is great for the investors. Because I will also talk about how normally other products, how do we normally set it. But in this case, we'll be going through this information. We'll have conversations with the company, the initial set of it, and then we'll get a preliminary understanding of whether this opportunity is a great opportunity for our investors. Right? Because we always have the view of angle of evaluating an opportunity, because we are not a company which is investing for equity, right? We are company investing for debt. So what we evaluate is, do the company have the ability? Does the company have a good business model? The company is generating good amount of revenue, sales, growing. They are backed by good equity investors, debt investors. The company is managing, good management, experience. So if the company is having all those tick marks, then we have, okay, this sector, everything is good. Maybe it's some company we need to look at it. So a lot of companies fall at this stage, meaning after the initial review process, we might choose to say that this is not a great investment opportunity for our investors and for us personally as well. That's how we think about it. And then we'll pass on, right? So that's the first process. And when we have a good amount of comfort that this is the second layer, okay, we can go ahead and look at this company in detail. That's when your detailed evaluation and due diligence comes. Detailed evaluation due diligence is the process where we go and look at audited financial statements, 1 year, 2 years, whether it's balance sheet, income statement, cash flows, their inventories, client conversations, due diligence of references, investors, equity, debt, as I told you, bank guys tied to it, conversation, detailed interview conversation with the borrowers, and then also market analysis. So we do every due diligence possible from because this is the process where we are going deep and understanding everything from that angle. So this is the time when we do all that part, and then you're going to go to the next slide. Then that particular amount of information then brings to the investment committee, saying, okay, these are what the information is all about from that angle, right? So during this process, there will be a lot of questions raised by the investment committee in terms of, okay, this detail needs to be evaluated further, this detail investment. So there will be back and forth conversations, and that happens with the company as part of the due diligence process, the committee that we are talking about. So those all questions, once it get answered, then we go and talk about the pricing for the risk of the investment. What is the return an investor would be looking to get, whether that risk and return is a very well balanced, and that conversations happen. So when that also happens, we are comfortable with the details provided by the company, and we have done all the conversation, reference checks, and then we have also done the risk and return in terms of pricing. Then, okay, fine. This is when we say, okay, we are ready to go with the opportunity, and that's when the investment opportunity happens. In the case of, except for invoice discounting, in case of all other products that we talked about it, the way it works is they are normally in the form of NCD structures or CPs that Sona has talked about. So the company, I think, as the altGraaf would be making the commitment to buy and do the investment, and then subsequently down sales to all the investors. So I think that's what I was talking about. We put the money to buy all the entire investment, so it is on our books, and then we down sell it to the investor. So it is a call that we are making, the fact that we are comfortable in the company putting the money and then it getting down sold, right? Except for ID, where the agreement is directly between the investor and the borrower. Then, as I told, the legal and execution process, which is the formalities, like if there is a security, if it's a real estate debt, there is a security, could be the land. So there should be a lien created on the mortgage. If there is a security on assets, there should be there. So then all the legal process goes through, because we have to put liens and everything tied to it, and the papers. I think that's when the legal execution process goes in, and after that, the investment is then live, and then we, as I said, we provide the money to buy the instruments, and then we downsell it on the to the investors on the platform. So that's in a nutshell, I would probably say, the entire process. The process typically takes at least about 3 weeks, I would probably say, and we normally, the approval rate right now to go to the final stage is about 6 to 7%. So about 100 deals, 6 to 7 deals make it to the platform. So we are very diligent about this entire process, and this is a process that we go through for every opportunity that we bring on the platform.
Well, that sounds like a long process. So our participants are aware that what are the steps that are followed in order to list a particular opportunity on the platform. Thanks, JP, for elaborately explaining that to us. So what has been our journey so far? So we launched the platform in September 21. And by December 21, we had 1,200 plus registered users with a total investments of 60 plus crores, and we were a team of 19 individuals. As per the latest updates from November 23, we are now registered users count is at 1,50,000 plus. The total investments on the platform is 2,700 plus crores, and we are now a team size of 100. We're headquartered in Bangalore. So if any of our participants are, residing in Bangalore and would like to talk to us and meet us, you're always welcome to our office. So we're ending the session here, and hopefully we will be back soon with another episode from the webinar series at altGraaf. So in case you have any questions, you can always email to us at care@altgraaf.com, and you can also reach out to our customer care number. So thank you so much, people, for joining us. Thank you, JP, for taking the time out and speaking with us today.